You all are hearing me, right? Okay, so good afternoon, everyone. Thanks so much for joining. My name is Ria Makomi, and I'm an account executive at CUNA Caribbean Insurance. So just a little house rules before we start. If you have any questions along the way, this is a very interactive session, so please feel free to ask any questions at any time. If you have a question to ask, you can either put it in the chat or you can raise your hand and the moderator will unmute your mic and allow you to ask your question as we go along. I do have some giveaways, which I will be displaying our winners at the end of the presentation. So I do hope you guys enjoy. So before we start, I just want to give you guys a quick intro of the company that I represent. So we are CUNA Caribbean Insurance, and we are a member of the CUNA Mutual Group, which we are the leading provider of insurance solutions for credit unions and their members. And we are located across different countries across the Caribbean. Our main focus is really to provide easy, low-cost insurance solutions for credit unions and their members. So our tagline is really for all people, because we do believe that everyone, no matter your age, your sex, your color, that you should have the comfort of financial security. So when we think of financial security, what people usually think of is, having enough savings, being able to probably travel. But a lot of people don't think about the risk there are when in terms of your savings. So sometimes a person may save towards purchasing a home or save towards a down payment on a car or even sending their children to school. But a lot of persons don't consider that there are certain occurrences that may happen that can actually impact your savings. And so financial security is really about being able to mitigate any risk that is to happen that can affect your financial security. So financial security refers to the peace of mind you feel when you aren't worried about your income being enough to cover your expenses. And it can also mean that you have enough money saved to cover emergencies and your future financial goals. So insurance is a big part about mitigating any risk that you may face along your financial journey or your financial goals. So a lot of times there may be instances, and I'm sure we've all heard, where persons probably would have been saving towards their home. And let's say they would have obtained a critical illness, or they probably had a family member that passed away. They are now faced where they have to find these finances to pay for either the illness or to pay for the funeral expenses that may come with losing a loved one. And a lot of times you're not in a position or have that money readily available for these things to happen. A lot of times persons may have to dig into savings. Some persons have to resort to getting loans, trying to raise funds. And so insurance is really there to ensure that we have protection from any financial loss that we may face throughout any stage of our lives. So insurance is an important element of financial planning, and there are different types of insurance that will help protect you and your loved ones in different ways against the cost of accidents, death, disability, and even illness. So at CUNA Caribbean Insurance, we offer a suite of products that is offered through PSCU Credit Union. So we have ranging from insurance that would cover death benefits. We have insurance to cover you against critical illness. We have insurance that would go against your loan. So if something is to happen to you, that expense won't go on to your family. But today we will really focus on the family indemnity plan and the critical illness plans that we have available at PSCU Credit Union. So the family indemnity plan is really one of our flagship products. This product is so important to financial security because death is something that we all face, and it all has to happen at some point. And so we want to know that when it does happen, that at least we are financially prepared, because death is inevitable. And that is something that you don't know when it could happen. We don't get a letter in the mail stating that, your loved one is going to pass away in 3 months. We don't get any notice. So a lot of the times when a death occurs, you are in a position where you're not ready. And so that's why it's important to have something in place that if something does happen, you don't add to the burden of losing a loved one, financial expenses. So this is really what the family indemnity plan is all about. It's a group life insurance that provides a level cash benefit in the event of the death of an insured person. So this product is really designed to cover any financial expenses that you may incur if an untimely passing is to happen. So when we look at financial expenses, this can look at your funeral, the cost of your funeral, the cost of burial. There are cases where the person may be abroad and you have to pay for this person to actually come down to the country to be buried. Final expenses includes the money for the wake, if you have to purchase clothes for the person for their burial. And then you also look at expenses even after the funeral. So if the family member would have left any unpaid credit cards or any unpaid hire purchase loans, then this financial burden is now passed on to the family. And a lot of persons aren't aware of this. And this is why it's important to have insurance in place, so that if something does happen, at least you can still leave that legacy, that generational wealth for your loved ones behind. At least you won't have to dig into your savings, So this plan covers up to a total of 6 persons. It can cover yourself, which you must be a member of a credit union. It can cover your spouse or significant other. So when we say significant other, we mean a common law. And common law means that you're living under the same roof with this person for a minimum of 5 years. You can also add your parents or the parents of your spouse or any combination of the two once they have not yet reached the age of 76. You can add your unmarried children ages 1 to 25. And in the case of differently able children, once you can provide proof that these children are permanently disabled, then they are able to stay on to the plan until, of course, they pass away. Now, the enrollment age for this plan is actually age 75. So once you are enrolled before age 75, then the plan can continue, of course, until these persons pass away. When you're adding persons as well, of course, you must provide the proof of these relationships. So in the case of the common law relationship or the marriage, you would either submit a marriage certificate or an affidavit, or there's now a certificate that you can actually receive in legal affairs stating that you're in a common law relationship, so that can also be provided. In the case of the children, of course, you'd provide the birth papers, as well as to verify your parents. They can provide birth papers as well, and the IDs for these persons. So as I would have said earlier, these plans are designed to be very cost effective for persons. So this is why we designed the product where there are several coverage options. So from as low as $52.80 monthly, you can actually receive an individual benefit of $10,000. So when I say an individual benefit, what that means is that, let's say for instance, you have 6 persons on your plan. Each person on that plan will actually be entitled to $10,000 each. So that's really a great bargain, because it's one premium that will cover up to 6 persons, right? Similar to all the plans. Our highest plan is Plan G, where you pay $528 monthly, and each person will actually be entitled to $100,000 in coverage. So we have a variety of options that can be suitable to any pocket. So the great thing about the family indemnity plan is that there is no medical required. So it's an easy sign up through your credit union. So you can go into the credit union and let them know that you would like to take out a family indemnity plan. All you have to do is fill out an easy enrollment form and provide the documentation for the proof of relationship. And once that is sent down to us, your plan will then be in effect the first of the following month that you would have enrolled. Now, the great thing about this plan is that there's also a critical illness rider attached. So this critical illness rider is for the primary insured member only. All right. And it would actually cover them for 5 major critical illnesses. That is cancer, heart attack, stroke, paralysis, major burns, and stroke. Right, and you have an option between 2 coverage options, either $50,000 in coverage or $100,000 in coverage. Now, the excellent thing about this plan is that there is no medical as well. However, upon enrollment, you would be required to submit, well, they would ask you some questions, pretty much asking if you have any conditions prior to enrolling. What will happen if, let's say, for instance, you had cancer prior to enrolling? You just won't be covered for cancer, but you'll be covered for everything else on the plan. So it's still a great bargain. In terms of the monthly payments, the payments are based on your age as well as the coverage that you would like to enroll for. So whatever age you come in at, that premium will actually remain the same until the plan terminates. Now, the enrollment age for this critical illness plan is actually age 60. So you must be enrolled before age 60. Once you're on before that age, the plan will continue until you reach age 75. So in the event that you are to obtain any critical illnesses covered on the plan, you would receive one lump sum benefit based on the coverage option that you chose to help you get better. And you can use it for any choice that you would like. All right, so before I continue, I just want to stop to ask if there's any questions on the family indemnity plan and the critical illness rider. Now, I'm unable to see if anyone is raising their hands or anything, so it would be great if someone can, let me see if I can go into the chat. Is there any questions before I move forward?
Yes, hi, Ria. We have a raised hand from Peter O'Neill, so I'm going to unmute him now, right?
Okay, great.
So, Peter, you can ask your question.
Can you just show the breakdown in the different plans from A to G?
Sure. Let me go back to that slide. Yes.
Right, and you said that the premium covers all of this up to 6 persons.
Correct. So no matter the amount of persons you have on your plan, that same premium will remain. So if you have 2 persons, if you just have yourself, or if you have the total of 6 persons, and let's say you would have chosen the plan A, your premium will still be $52.80. Yeah?
Thank you.
You're welcome. I think I saw another person raise their hand.
Yes, we have another question from Anthony Guy. So, Anthony. Okay, so Anthony mic is not working, so you could probably just send question in the chat. I'm gonna read it up here.
Okay.
So
Great.
I'll go to the next person. It's Glynis.
Sure.
Hello, Anthony.
Can you see as well?
Anthony. Yeah, I'm seeing Anthony fine. He got his mic to work. So Anthony. Yes, hi, Glynis. Your mic is on, right? So you can go ahead and ask your question.
Okay. Now, the family indemnity plan also has a critical rider on it.
Yeah.
If, for instance, you're on Plan E and you're paying $52.80 per month, I just want some clarity. Is that $52.80 plus the premium for the critical rider as well, which is $224 per month?
Yes. So
50,000.
yes. So if you choose, you can also take out the critical illness rider, but it's up to your option, and it will be for an additional cost, and the cost will be based on your age
On your age.
as
Okay.
well as the coverage that you have. So let's say you are in the age bracket 18 to 34 and you want $100,000 in coverage, your premium will actually be $70.
Okay. Per month.
And your family indemnity plan premium as well.
Okay. Next question. Now, you say the plan covers up to 6 members.
Yes.
If, for instance, not the member, but one of the 6 members die, do you have to now go, okay, after like carrying all the requisite documents and whatnot, do you have to go back into the credit union to reactivate the plan, or would it continue?
Okay, so great question. So the plan will continue. So even if let's say the parents on the plan would have passed away, all that primary insured member would have to do is go into the credit union and file the claim on behalf of the parents that would have passed. So you would have to walk with your death certificate, of course, and the ID of the deceased, as well as your ID. And that will be sent down to CUNA for processing. And within 2 days, you should receive the approval that the claim can be paid, and the credit union will then disperse that money to the member who filed the claim, and they would receive their benefits.
Okay. Thank you.
You're welcome. One thing to mention that I don't think I mentioned prior. So when you first enroll, there is a 6 months waiting period. So during that 6 months, if you were to pass away, or any of the members on the plan is to pass away of natural causes during the first 6 months, they will not receive a benefit. However, if after the 6 months has passed, the coverage will be in full effect. Now, if it's a case where the member would have passed away of an accidental death during the first 6 months, the claim will be paid. Right? Any more questions? I think I saw another.
Yes, Maria. So Anthony typed this question in the chat. He said, what happens after 75 years with illness? Will we have to continue paying the premium?
This is in relation to the critical illness plan. Okay, so in relation to the critical illness rider, when you reach age 75, that's when the plan will cease because you have reached your termination age, and that will mean that you do not have to pay any more premiums after you would have passed that age. So no, you don't have to. I'm seeing his hand raised again. Yeah, so you don't have to pay any premiums after you have passed age 75. Now, if it's a case where let's say you would have passed away before age 75 and you do have the critical illness rider, what will happen is your beneficiary on your plan will actually receive all of the premiums that you would have paid for the critical illness rider back. But that's only if you would have passed away before reaching the age 75. Yeah. Any more questions on this?
Yes, Charmaine asks, if I don't have anyone to add onto the plan, can I add my grandkids?
Okay, so we do have to meet the certain eligibility requirements in terms of who you can add on. However, if it's just yourself on the plan, you can assign a beneficiary, and that person can then be the person to receive the claim if it is the person is to pass away. So you can assign a beneficiary. So all you have to do is go into the credit union and ask for a designation of beneficiary form where you can add the person of your choice to whom you would like to receive the benefits.
All right, I'm seeing Anthony's hand raised again. Let me see if he got his mic to work. Okay, so let me just check.
Okay.
Yes, you hear me?
Yes, I'm hearing you
Yes,
clearly.
perfect.
Thank you so much. All right. So I understand that part with the 75-year part. So if I live beyond 75, would I be given a lump sum?
No. So how the premiums work is that for each month that you pay, because it's a term insurance, each month that you pay will be covering you for that month that would have passed. So because there's no shorter sum or anything on it or savings plan, then you won't get anything back in this case for this particular plan.
Brilliant. Got you, understand.
Yeah. Any more questions on the FIP and the critical illness rider before I move on? Yeah, okay. So this family critical illness plan is a new, fairly new product that we would have taken out that is actually available at PSCU Credit Union. And this is because we would have received a lot of feedback from the credit unions as well as members that they would have liked a plan that can cover themselves and their entire family of critical illness. And so we did listen. So this plan is much more attractive. So it covers 6 members of your family, similar to the family indemnity plan. And this one actually goes up to $300,000 in coverage. All right. Now, the great thing about this plan is that there's no medical required, similar to the critical illness rider. Like I would have said before, you just have to answer 2 medical questions, which will simply ask if you had any pre-existing conditions. If you do, you will not be covered for that particular condition, but you'll be covered for everything else. Under this plan, it actually covers for 6 critical illnesses. So we would have added on an additional one. So that is actually cancer, heart attack, stroke, paralysis, major burns, and we would have added coma. All right. Now, this plan actually is very attractive because if you would have never made a claim and you would have reached that termination age of 75, similar to the critical illness rider, you would actually receive 50% of your premiums back. So this one is slightly different to the critical illness rider. So let me repeat again. So similar to the critical illness rider, you would enroll no later than age 60. So you must be enrolled before age 60. And this plan will terminate at age 75 as well. But with this particular plan, if you were to reach age 75 and never made a claim, you would receive all of the 50% of the premiums back that you would have paid throughout. Similar to the FIP, where you can add your children ages 1 to 26. On this plan, when that child reaches age 26, they will automatically come off the plan as well, similar to the family indemnity plan. But in this case, when that child reaches age 26, you will actually receive the premiums that you would have paid for that child. You'd receive 50% of the premiums back. So this particular plan has something where you can actually get something back while you are still alive, right? Now the premiums are level premiums. So let's say you would have come in at age 18 and your premium would have been $36. That $36 will actually remain until the plan terminates. So the premium does not increase as you age, right? So these are the premium options. As you can see, there are two different premium options. So there's the premiums for the primary insured and premiums for the additional insured. Now, unlike the family indemnity plan, this plan, each person actually has a specific premium that they would have to pay. Reason being, the premiums are based on your age. Because we can't give an 18-year-old, for instance, the same premium as we would give maybe a 50-year-old, because the risk of a 50-year-old is actually higher to obtain a critical illness than an 18-year-old. So this is why the premiums are actually lower. So the younger that you actually enroll, you'd actually receive a better benefit. It would be a greater benefit for you. So let's say you would have enrolled at age 34 at $100,000 in coverage, your premium will actually be $73, and that $73 will remain until you reach termination age at age 75. So this one is slightly different to the critical illness rider in that sense. Similar to the FIP as well as the critical illness rider, there is a 6-month waiting period. So during this first 6 months, if you were to obtain a critical illness of natural causes, so in this case, it would be stroke, cancer, heart attack, then you will not receive that claim during the first 6 months. However, after that 6 months has passed, you can receive your full benefits. And if you do obtain a critical illness of natural causes, after the 6 months, you will receive your claim. However, if you would have received a critical illness of an accident, so in this case, that would be coma or paralysis, you will receive your claim payment prior to the 6 months, even if you have not yet reached that 6 months waiting period, right? Similar to the FIP, you can add yourself, your spouse, your parents, or your in-laws, or any combination of the two, and your children ages 1 to 25. And in this case, there would be separate premiums per person on the plan because the premiums are based on your age. So let's say, for instance, you have yourself, your spouse, and your 2 children. What you'd have to do is look at the ages for each person that you want to be covered and add all of the separate premiums for each person under that plan. So I'll give an example. Let's say I am age 34 and I want $100,000 in coverage. My initial premium as the primary insured person will be $73. And let's say I want to now add my spouse as well, who is 33 years old, and I want to add my spouse under the $50,000 bracket. Then I would now have to add the $73 to the $32.85 that my spouse will pay, right? So you have to look at the age bracket that they're under, as well as the amount of coverage that you want to cover that person for. Yeah. So any questions on the critical illness plan? Any questions on any of the products or the family critical illness plan? Let me see if I have anything. Yes, I'm seeing Anthony hand raised.
Yeah. Anthony.
Yes. In my situation, I have my father with me still, and my in-laws.
Right.
You said I'm only entitled to two, correct?
2 parents maximum under the plan, yes.
Right. But I want to add, so I have my father, I want to add my in-laws. Is there a difference I have to pay to add my in-laws?
Pardon, can you repeat? I didn't hear the last thing you
Is
said.
there a difference I have to pay to add my in-laws?
No. So you can either choose whether you want to add both your parents or one of your parents and an in-law, or both your in-laws. And under the critical illness plan, well, each person has separate premiums. So yes, you would have to pay a premium for that in-law if you're adding them to the family critical illness plan.
No, I'm asking for the indemnity plan.
For
I want
the-
to have
Mhm.
I want to have 3 of them. So I want my father, like 2 in-laws.
No, so you
My
have a
grandfather-in-law,
maximum
yeah.
of, right, so you have a maximum of 2 parents on the plan. So you would have to choose 2 parents. And what I usually advise is probably your spouse or probably a child that is working can probably take out the other 2 parents under their plan.
Got you. Because I don't think I could choose between my in-laws because they will hate me after that.
Yes, so probably what you can do is probably a spouse can have a plan as well, that she can cover her parents and you can cover your parents under the plan. But unfortunately, the plan holds a maximum of 2 parents under the plan.
Last question: if the primary person dies,
Mhm.
how does the plan continue? Does the family members have to continue paying the premiums, or that's it?
Right. So because it's a family plan, we did design a product where it can continue. What will happen in this case, the next of kin, so let's say you would have had a spouse on your plan, the spouse can decide if they want to continue paying the premiums on the plan. If they do want to continue the plan, they would have to become a member of a credit union, or if they are a member of another credit union, they can transfer the plan to that credit union and continue paying the premium so that the plan can stay in place. So once premiums are being sent in, the plan will continue.
Got you. Thank you so much.
Yes, I'm seeing Glynis Gomez, hands raised.
Are you hearing me?
Yes, I'm now hearing you.
Okay. All right. It's based on the question prior to mine.
Mhm.
The primary holder dies.
Right.
Say that the spouse could take over and continue the plan.
Mhm.
The question is, if for some reason, let's say in my case is common law,
Right.
His parent is over the age of 75.
Okay.
You have to be, would it automatically be transferred to him? When I say automatically, let me refrain that. Now, I had called in sometime to ask this question. And let's say, for instance, because I am the primary holder of the plan.
Okay.
If he's the next of kin.
Right.
But his father is on the plan, which is over 76 years,
Right.
right? So if it is that is it something that you have to send in an application to continue the plan? And if it is that that is the case, would his father automatically continue on the plan, or would it be CUNA's consideration to have his father continue on the plan? I don't know if I confused you there.
I think I got what you're saying. So let's say the primary insured is actually your spouse, and you are not on your spouse's plan, right? It's just self and his father,
No, the primary insured is me.
right?
My spouse is on my plan.
Right.
His father is on my plan as well, which is my father-in-law.
So if your spouse
So
passes
if me, which is the primary holder,
right,
right? Now he's in next of kin,
spouse will be the next of kin.
right? So would his father continue? Let's say he decides he wants to continue the plan. Would his father still continue on the plan even after the age of 76?
Correct. So how the plan works, once the person is enrolled before age 76, they can continue on the plan once the premiums are being paid. So in the case that you related to there, let's say the primary insurer would have passed away, it would go to the next of kin, which is your spouse. And let's say your spouse did decide to continue paying the premiums, his father will still remain on the plan and will still have full coverage.
Okay. If let's say first time I'm hearing about this that you have to have a certificate of, you have to be living, because I know initially they had said 2 years. Well, I hear you, I heard this evening you said 5.
So currently the laws of the land. I know there were conversations where they were thinking about reducing it to, I think it's either 2 or 3 years, but I don't think that has passed yet. So we would go with literally what the law actually states. And right now it still stands that common law is considered 5 years.
Right, okay.
Under the same roof.
Okay. And this certificate, you talk about affidavits and whatnot. Does that mean you have to carry that into the credit union to be sent to you? Because when I had joined, I was never asked for that.
Yes, so because there has been a lot of changes with compliance and with the FIU, and things have gotten a little more strict for the financial industry on the whole. And so we require these proof of relationships upfront when persons enroll. Now, because persons would have been on the plan for many years, a lot of times we may not, these persons would not have been required then to provide these documentations. But going forward, any new persons that enroll onto the plan must submit these in order to be approved. If it's a case where you want to upgrade your plan, or let's say you want to add on a person, you will then be required to submit these documentations. Now, the reason for these documentations as well is to avoid any discrepancies that we may have. So there would have been instances in the past where the persons would have never submitted any IDs or proof of address. And let's say, for instance, they would have spelled a name incorrectly on the form. And we don't have the IDs to look back and say, well, this name was spelled correctly. So we would upload it to the system. And then what will happen, let's say in a time of a claim, that person passes away, and someone else probably would have added that same person onto the plan. So let's say it was a parent would have passed away and 2 of their children would have added them onto the plan. Now, under all of our plans, you can only be under 1 plan at a time. You can't have 2 plans at the same time. And so that will cause duplication of coverage. And so because we didn't have that ID to verify that this person did not spell the name incorrectly, and a next person add that person onto the plan, we will not notice that it's the same person that is being added on. And in the event of a claim, we will actually pay the claim to the person that added that person first. right? So no matter if one of the persons had a higher plan than the other, we will always pay to the person that sent the claim first. So to avoid these sorts of mishaps to happen, we do provide information to be provided upfront, and also to alleviate any fraudulent activities, etc. I'm seeing a question from Candace Francis. I joined a little. You want some information on the family indemnity plan? Sure, we can go over it. So let me go back to these slides. Anything in particular on the family indemnity plan that you would like to know, or you just want me to go over it? All right, so the family indemnity plan, it's a group life benefit that would cover yourself and 5 other members of your family in the event that anyone on your plan is to pass away, right? So you can actually add yourself, of course, your spouse or your significant other. And when we say a significant other, we mean common law, your parents, right? So it can either be both your parents or both of your spouse's parents or any combination of the two. So it's a maximum of 2 parents on the plan. Once they have not yet reached age 76, you can add your unmarried children ages 1 to 25. And if you have a differently able child, once you can provide documentation that this child is permanently disabled, that child can remain onto the plan until they pass away, right? If you are enrolling onto these plans, you must provide a proof of relationship for each person that you do add on. We have up to 7 coverage options. So from as low as $52.80, each person on your plan can actually receive a $10,000 benefit. So that's one premium covering up to 6 persons on your plan, right? There's no medical required to join this plan, and it's a simple sign up within your credit union. So you must be a member of a credit union. So let's say you are a member of PSCU credit union, you can go into the credit union and let them know you'd like to sign up onto the family indemnity plan. And you just provide the proof of relationships for each person that you add on and sign the enrollment form, and your plan will be approved. And then there's also a critical illness rider that is attached to the family indemnity plan. So it's your option if you would like to add this additional payment to the plan to add this on. And this will cover the primary insured member only for 5 major critical illnesses. That is cancer, heart attack, paralysis, major burns, and stroke. Right, so I hope that covered enough. I'm seeing some more questions. Right, I don't have anyone to add on. Can I add my grandkids? Or was that there before?
No, the other question is from Maria.
Mhm.
Can you take out a plan for a family without being on the plan, with one of the family members being the primary insured instead of you?
Okay, so in this event, yes and no. So what happens is this person will have to be the one that is the member of the credit union. They will have to sign the forms as the primary insured. But if you choose to pay the premiums on behalf of this person, that is okay. But this person has to sign and be a member of the credit union in order to be on that plan.
All right, so we Anthony has his hand raised again. So Anthony.
Yeah, now this question may sound a bit morbid, but if I have the critical illness plan with the package, and I get a critical illness, and that critical illness lead to death in a short space of time, would my beneficiary get that benefit of the 100,000?
Right. So great plan. Great question. And that will also apply to the family critical illness plan as well. So once the claim would have been submitted and was already being approved, and you unfortunately did pass away, once that claim was approved, your beneficiary will still receive the monies that you would have been paying for. So yes,
Brilliant.
once the claim was submitted.
Brilliant. Thank you so much.
You're
Oh,
welcome.
wait. You just said once a claim has been submitted, so
Yes.
I have to let my family know that I have this plan, and they'll make the claim after I die, and everything will come through. Correct?
Yes.
Okay, thanks.
Any other questions? I don't think I'm seeing any more.
Yeah, I'm not seeing more questions or any raised hands.
Okay, great.
So I guess that's good.
Yes, that's good. So as we don't have any more questions, okay, I'm seeing something coming up in the
One more came in, yeah. If you only sign up for the FIP, can you sign up for the critical illness package after?
Yes, so if you sign up for the FIP initially, you can always choose at any time to either take on the critical illness rider, and you can also sign up for the family critical illness plan as well, as these are two separate plans. So you can actually have the FIP with the family critical illness rider as well as the family critical illness plan. So yes. Let me see if there's any more questions. Right, so I'm not seeing any more questions. So if we have no more questions, we can probably do the giveaway. So I actually have 3 giveaways at this time. And so I was actually looking at the person who would have joined the presentation first. So the first person to join, let me see if I can pull the name. So the first person that I saw join the presentation was actually Simone Taylor. So Simone Taylor, you've won yourself a hamper. So what will happen is the credit union will let you know when the packages are available and they will call you to collect. All right, so Simone Taylor, you've won yourself a hamper. So I have 2 more hampers to give away. And I want to give away to the persons that I think would have contributed and asked a lot of questions and really engage me. And so those 2 persons is Anthony. Let me get your full name. Anthony Guy, as well as Glynis Gomez. So you both would have won yourself some hampers, right? So Anthony Guy, Glynis Gomez, and Simone Taylor, you'd have won yourself hampers. So congratulations. The credit union will let you guys know when the packages are ready for collection. If no one has any more questions, I just want to thank you guys for joining the presentation today. And I really do hope you enjoyed it and you would have learned. If you have any more questions on any of the products that we have available, you can, thank you. Right, so if you have any questions, you can actually contact me directly, or you can contact your credit union. I will place my number here in the chat. So if you have any further questions, feel free to give me a call, or you can also WhatsApp me. Right. Yes, that was a surprise. The Zoom prizes was a surprise. Right, so if we have no more questions at this time, I want to say thank you for joining, and I really do hope you enjoy.
Andrea, thanks again. Just want to encourage all the attendees to click on the feedback link, just to give a little feedback on how the webinar was, the presentation went. Okay, so I posted the link in the chat for you guys to go to. Yeah. So thanks again, Ria.